Hey investors, welcome back to another episode of vishalvealthview. Today we have a jam-packed episode as Government of India is clearing acquisition proposal for military goods worth 1 lakh crore. This is coming in the backdrop when defense stocks are on a massive bull run and all the big fund houses are sounding caution. Another major development in India's defense sector is coming from outside India. Brazil is eyeing for Akash missile defense system. Companies like Bharat Dynamic, Bharat Electronics are set to benefit from these kind of deals. And they're already touching at all-time highs. Apart from that, we'll be taking a look at massive rally in Lloyd Metals and Energies and why I'm thinking about building some positions there. And we'll be talking about another potential multi-bagger stock that I found called Integrated Industries. I'm also thinking about building positions there. So without wasting much time, let's start this episode. First, let's start with this news article that came out on July 3rd, 2025. Government of India clears acquisition proposal of military goods worth 1.05 lakh crore. Now, if you see the official statement, Defense Acquisition Council, under the chairmanship of Raksha Mantri Shri Rajnath Singh on July 3rd, 2025, accorded acceptance of necessity for 10 capital acquisition proposal amounting to approx 1.05 lakh crore through indigenous sourcing. Now, this part is important. They are planning to spend the entire 1.05 lakh crore in companies that are developing defense equipments in India. These might include multiple type of equipments, not just big weapons like warships or fighter jets. If we see the details, then the acceptance of necessity or the need for these proposal is for defense equipments like procurement of armored recovery vehicles, an electronic warfare system, and an integrated common inventory management system for tri services and surface to air missile. So surface to air missile are mostly the defense weapon, that's Akash missile system. Bharat Dynamics is set to benefit from this particular deal and this particular government contract. Now, if we see the defense index, which is the composition of all the defense companies in India, this is right now trading at an all time high. This index touched its all time high previously in July 2024, and right now it's trading almost at a 20% higher valuation with respect to its previous all time high. Between July 2024 and to some extent May or March 2025, this entire sector was in a bear phase, but right now it's coming back up again. However, the worry is the PE and the valuation that at which this company is trading at. Bharat Electronics, Hindustan Aeronautics, Solar Industries, and Mazagon Dock Shipbuilders. These four companies make up 60% of this entire index. That means if you are putting money in this index, majority of the money is going in these four companies. One is responsible for developing electrical equipment for our defense industry. Second is responsible for developing all the fighter jets, drones for our industry. Third is responsible for developing explosive drones, and fourth is responsible for developing submarine ships, warship. Apart from that, they also have maintenance operation for ships. So that's my main worry. This entire index is trading at a really high valuation right now. Now, other mutual fund houses also have the same opinion. Director of Anand Rathi Wealth Limited, Rishikesh Palve, had an opinion that sector remains very sensitive to geopolitical events and similar sharp rallies have occurred in the past, usually followed by a phase of consolidation or corrections as the sentiment cools off. Given this volatility, investing in sectorial thematic fund is not recommended as it requires tactical entry and exit to ride the performance, which is not suitable for regular investor. And I completely agree. It's really hard to time when you should make movement in defense sector. At this time, I got lucky. I was able to make some investment in this entire index at the beginning of April when Trump was announcing his tariffs, and I was able to enjoy some amount of gains from this entire rally. I have sold my position since then, like booked some profit, and I'm rotating that capital to some other place which might be more safer than defense right now. I'm not saying defense index is not safe, but I think it's trading at a really high valuation right now. I cannot justify these valuation at this stage, but again, the entire sector is high growth. Government is focusing on that, and that's why I cannot just take all of my money out from this entire index. I have to maintain at least 10%, 15% exposure in this entire index in my portfolio, and that's what I'm doing. Next, we have a company called Lloyd's Metals and Energy Limited. The company has a total market capitalization of almost 80,000 crore. That's equivalent to 10 billion right now, and the company is trading at a premium valuation of 56. The company enjoys healthy ROC of almost 38% and healthy ROE. If we see the sales growth and the margins for this company, the company is maintaining a healthy net profit margin of 17%, and the company sale has been growing in the past 2 3 years because they expanded and they had a capex during year 21 22. Now, interesting part about this company is the company is diluting. The promoters are selling shares, and both FIIs and DIIs are buying at this price. And the interesting part is the sales growth in last 1 year is just 3% and the profit growth is just 7%. However, the CAGR on stock is 104%. So there are two possibilities. Either there's stock manipulation going on, or there's something that I'm not able to understand why DIIs and FIIs are able to buy at this price and why are they buying at this price. So let's take a look at the cash flow statement and its analysis. Now, if we see the cash flow analysis, the operating cash flow for the company declined in year FY25 compared to FY24. However, they came to the market to raise capital and they are looking for a massive capital expenditure in FY25 that's close to 3,000 crore in the year FY25 itself. And as per their latest transcript, they're planning around 35,000 crore worth of capex in next 3 to 5 years. So the interesting part along with that here is the company has raised capital using both equity and debt, and that means the company will have options to raise capital whenever they are looking for expansion. And considering they are enjoying healthy operating profit margins and net profit margins, the company will be able to grow its business organically. Now, what would be interesting is the entire Indian steel sector. This company is operating in steel manufacturing, iron ore manufacturing. However, Indian steel sector is planning to grow at around 8%. That's the projection that's given by major fund houses and major research agency. However, this company is doing an capex and it can expect a growth even more than that. Now, I'm not sure what that growth is going to be right now, but that's why I think FIIs and DIs are interested in this company. Now, based on the capex plan, the company is expected to grow its sales around 15 to 20%, and they might be able to improve their PAT and margins and grow their profit by more than 20% because their operating efficiencies are improving. And this is in the backdrop when the entire steel sector is growing at around 8% CAGR. This is interesting. However, Nifty GPT is recommending that I should not invest in this stock right now, even if the capex is going on. The company is trading at an all-time high. I think I'll probably wait and hold and see whenever there is a correction and buy at some dips because this company is clearly a good long-term strategy for next 3 to 5 years because they're planning capex for next 3 to 5 years. So I'm not in a hurry to invest my money just tomorrow because even though the company has strong fundamentals, good growth trajectory, the valuation matters, and right now it's trading almost at a 2x, 2.5x with respect to its peer like Tata Steel and any other steel company. So good stock, good company. I'll keep it on my watch list. Now, next company on our list is a company that's specifically trading in BSE, not in NSE, and the company has a market capitalization of 536 crore. That means it's a SME company. It's not even a mid cap company. It's not even a small cap company. It's a SME company. It's a really small company. However, what's interesting is the journey of the company and the business model. So the company was a technology company called Integrated Technology, and they completely changed their business model, did some restructuring, and now the company is called Integrated Industry. And the company acquired a subsidiary called Nurture Pure Food Private Limited, and they have products such as biscuits and bakery products like bread and any other thing. So the company completely changed its business model, and right now the company is trading at a PE of just 10, which is really interesting, with an ROC of above 30% and ROE of almost 27%. If we see sales and margin, the company is able to maintain a net profit margin of about 18%, which is less than traditional companies like Britannia. Britannia is able to maintain double digit net profit margins, and that's why they have better cash flow as well. But this company can be put into an FMCG space and they have a decent margin. It's not like they are best in class, but they are decent for a company that's just starting out. The company's market cap to sales right now is trading at just zero point 0.9. And this is the most interesting part. Like if we check Britannia Industries right now, and if we check market cap to sales ratio of Britannia Industries is almost 6 to 7. That means the company is trading at almost 6 times less valuation than its competitor like Britannia Industry. But obviously, Britannia Industries business model is far more bigger. They have more market presence, and people trust this brand more. No one has heard of Integrated Industry. Now, if we see the annual report for Integrated Industry for year 2024, we'll see this section where they have mentioned their subsidiaries. According to that, they have acquired a company called Nurture Well Foods Private Limited that manufactures biscuit and bakery products. And if I go to the website of Integrated Industries Limited, they have completely rebranded themselves. The About section right now says that incorporation in 1995, Integrated Industries Limited is presently engaged in business of organic, inorganic foods, products, bakery products, and other food items. Let's take a look at the Instagram of this particular brand, Nurture Life, Nurture Well. Now, this is really interesting. I think this can be a scam because it only has 87 posts and 7,100 followers. The problem is, I've never heard of this brand called Rich Light. It can clearly be a scam, and I might not even be aware about it. Now, this is the website of Nurture Well Food. Now, I have never seen these biscuits and this company called Rich Life. How are they projecting these numbers? Now, I'm not sure whether they're right or wrong. If any one of you who is watching this video and अगर आपने रिच लाइफ नर्चर वेल कंपनी का नाम सुना है या इसके प्रोडक्ट्स देखे हैं, डू write a comment because I need to confirm whether this company is actually real or not. But from the point of view of fundamentals, oh my god, amazing. This is like a company which screams, invest in me, because it's trading at a really low P. It has a really strong fundamental growth aspect because biscuits are easy to sell in India and cookies are easy to sell. And if they are having a growth trajectory of almost 131%. Okay, it's 131% is not realistic. It might drop to 50%, 40%, but they are going to be an explosive growth phase for coming years. If I take a look at the cash flow statement, they are purchasing fixed asset. They invested some amount of money in purchasing fixed asset in March 2024. And the company maintains a healthy profit from operations. That means they are able to sustain their operation without any debt. This is interesting. This is really interesting. I'm not able to find any major red flags as of now. Even though I checked the shareholding pattern, the promoters have majority stakeholder, and apart from that, they are buying stake. Like in December 2024, March 2025, they increased their stake up until 53 or 54%. Again, not a red flag, it's a positive thing. We also have seen some amount of DII dilution, not sure why. But all of these things are not making sense to me. Why is this company trading at such low valuation? So I think this company might have an interesting future. I'll keep this in my watch list. Make some amount of investment to make sure that this company is always under my radar. But I'm not planning to take any big bet right now. I think this company is going to have a long growth trajectory if they play their cards right. So I don't want to hurry in putting in my money at one go and just wait it out how the company plays out their strategy, because I don't have any like too many transcripts and PPT available to judge their like history and how they performed in the past. So interesting bet. I'm not sure what will be the future. It's possible that 5 years from now we'll be looking at this company and we'll be sitting on a lot of profit, or we'll be thinking about, hey, what a dumb choice did we make on July 5th, 2025. And that's it, what I have for you for today's episode. I hope you enjoyed this video, investors. Do hit the like button and subscribe to Vishal Wealth View. Bye bye, stay safe.